Welcome back, everyone. My name is Adam. I have Rusmin.
Hello.
Victor.
Hi, everyone.
And today we're going to talk about CICT, CapitaLand Integrated Commercial Trust. So recently, CICT, it's a REIT. They announced a private placement and a preferential share offering.
Yep.
Because they want to raise money to fund an acquisition. So we're going to talk about this potential deal, the acquisition, and whether you should participate as a retail investor in the preferential offering.
Yeah.
So we're going to answer all these questions. So just a quick introduction about what this private placement pref offering thing is all about.
Yeah, I think before we go into that, maybe we talk about a little bit about the malls that they're going to acquire,
Yeah.
which is Ion Orchard, right? This is probably one of the most iconic shopping mall along the Orchard Road, right? It's one of the places where the tourists will visit when they come to Singapore. Orchard Road is like the main stretch where they come, right? And now this property, it's like perfect. They are like connected straight to the MRT station. Right? Once you come out, you can just go straight into the basement to down to the basement
on
floor.
top of it.
Yeah. So the traffic footfall there is actually very healthy, and according to them, it's about 160,000 a day. Right. So that's why when you go there, it's usually always very crowded. The last time I've been there, I think like probably a couple of months back.
Only a couple of months back.
Yeah.
I go there quite a bit. Yeah.
But I think it's iconic because tourists will definitely go to this place also.
Okay.
Right. I mean, before it was just a field where a lot of people have picnic over there. I remember when I was very young, right?
Empty
and
field.
after they built, I was wow. Yeah, I just go and take a look only.
Yeah.
And you look at the tenants, you have some like outside you have Tiffany & Co, Cartier, LVMH, So all these are some of the luxury brands. Yeah. So but of course, you still on the basement too, all that. Usually you have a lot of food.
I find this mall very funny because all the upper levels, level 1 and above, luxury brands,
very expensive.
A lot of space,
Yes.
not crowded at all. Go into the basement, bam, full of people. It's like you're mingling with the masses. More stuff is cheaper. It feels like Midgar for those Final Fantasy players. But anyway,
I mean, it goes all the way down to I think basement 4 or something.
basement 4, okay.
Yeah.
So this is the mall,
Yeah. So the status of this property is that, of course, if you look at the land tenure, you still have about it's a 99 years leasehold starting from 2006. So you have about 80 over years lease left. So it's quite healthy for investment properties, and the occupancy is about 96%. I think not surprised given that most of the you seldom see empty shop lot there, right? Basically, they're going to acquire this property at the gross rental yield of about 7.1%. Right, and they also did mention that this thing is going to be accretive in terms of DBU. The accretion is about 1.2% if you base it on the pro forma full year 2023 result, right? And then if you based on first half, it's going to be about 0.9%. So the accretion seems like a little bit only, like appreciation, right? And that after this acquisition, right, the leverage ratio will still remain stable at about close to 40%. Okay, so if you look at the NAV, right, they did not mention it very clearly, but they did put it on their some of the long documents that they have to read. There's a slight dilution, right, from 2.07 to 2.06 after this acquisition, if you based on full year 2023. Okay, and of course, I mean, if you read some of the reports, right, some analysts think that this property seems like on the expensive side, right, because they did not disclose the actual net property income for this, so it's very difficult for us to calculate that cap rate, right, for this, whether it's accretive for the CICT unit holders, right? So, but if I were to base on their gross yield that they were calculating at about 7.1%, and I compare with existing retail portfolio of CICT, actually this is not accretive, right? Because it comes out to be about 7.7% for their retail portion. But if you look at the overall CICT gross rental yield, it's actually stands as about 6.5%. So it looks like it's accretive, right? But if you just compare strip down apple to apple retail component, of course the retail component, they do have like Plaza Singapura, you have your Junction 8, Bedok Mall and all this, right? So if I were to compare that, it seems like it's not accretive for just retail itself, and it seems like they are buying at a higher end. All right, largely because CICT office rental yield is actually a lot lower at about 5.1%. Okay, so on the group level, it's still accretive, but on the retail side, it seems like expensive. Okay, so the other way that I will look at it is, of course, the comparable properties, right? That is near the Ion Orchard, and that will be our, I think Wisma Atria, right? Also connected to the train station, and then you have like Takashimaya, right, which is next to it, Ngee Ann City, right? And then across the Ngee Ann City, of course, you have Paragon. Right, so these three properties are very comparable, I think, to Ion Orchard. So if I go and calculate the gross rental yield for Paragon, it comes out to be about 6.3%. And the fact that they are buying this at 7.1% gross rental yield, I think it's pretty solid. Okay. So, and of course, Paragon, the lease starting actually from, I think they still have about balance of about 80 over years or so, right? But it's actually slightly younger, on the younger side, because their 99 years lease actually start from 2013. So if I were to compare with the other two properties of Ngee Ann and Wisma, the gross rental yield for Ngee Ann is about 5.7%, and then Wisma actually is about 6.2%. Okay, and both also have like luxury brands, right, on their properties. And bear in mind that this Ngee Ann City and Wisma Atrium, all right, their tenure of the lease is actually on the shorter end. For Ngee Ann, it's actually like less than 50 years, and Wisma Atrium is actually less than 40 years. So actually, to me, this Ion Orchard acquisition is pretty good deal for CICT unit holders. And bear in mind that they say that a DPU accretion is only like about 1%. Okay, let's put it at 1%. There's still a potential upside from the tax saving, because right now they are paying rental income. There's a corporate tax of 17% that they need to pay, right? So they can actually now go to apply and enjoy this tax waiver because they are REITs, right? As long as they pay out 90% of their distributable income, they can actually enjoy these tax advantages. So potentially, I think the accretion is more than 1% that we are seeing right now. Right, so there's a potential tax saving.
Not yet happening.
They can say it on their footnotes, right? Just that it's not that obvious. So I think on the number side, it's pretty solid. Okay, and bear in mind that there's no known supply in Orchard Road area for future malls. I think there's no space to build.
It's pretty much full. Unless they tear down some of the older buildings and build something new. So, and then is you go to look at the current Orchard PSF. Right now, as the first half, is still the overall Orchard PSF rent is still below the pre-COVID level, right? So remember that during the COVID, there was tourist arrival dries up, right? And that actually depressed the rental market in that area, right? And now it's actually recovering. And currently the rent is still like about 4.4% before the pre-COVID level. So there's a potential room for them to increase the rent over time.
But I think we also need to take note is that Orchard is like prime area, and usually locals like us, we don't always go down there. Unless you stay near over there, right? True. But most of the locals, they don't really go to Orchard. I mean, during my younger days, we do always go Orchard because that's the only mall.
There was only Orchard.
But now your suburban malls are so good, right, that you don't need to go to Orchard.
Sometimes I feel the suburban malls are even more crowded on the weekends than Orchard. If you think about it. I go to like, I don't know, I was in Next or something. So why is it so crowded here?
You go to North Point.
North Point? Crowded. I've not been to North Point for a really long time.
So I think we just need to take note that this is one of the risks for central type of mall, right? But lucky is because they focus a lot on the luxury brand, right? So a lot of tourists also. So the inbound tourists does affect.
Yes, it's a bit more cyclical in that sense, because if you have a suburban mall, you have a catchment area, people will always go there.
Correct.
But Orchard Road has has tourist influx as well. And if that dries up, that affects performance. So for now, hopefully it will go back. I mean
if I'm a tourist account, I definitely go to Ion Orchard first, check it out, because the buildings look very iconic.
I mean, you want to go to the shopping belt, that shopping belt.
You will definitely go.
And Ion will be the first stop in a sense.
Okay, so the MRT is Orchard.
So if you look at this acquisition, I think is a pretty good deal with the potential upside over there. So if you look at on the CICT level, obviously this asset is going to get acquired, and how is it going to change your risk level for this particular CICT, right? So if you look at this after this acquisition, it's going to push up the retail component from 30% to 35%, right? And of course that will going to have a higher concentration on the downtown side. But I think even with this acquisition, I will consider it as a small acquisition because it's like less than 10% of the overall total asset, about 7.5% of the net asset value. Okay, but again, that will make CICT even a bigger player in the retail market. I think they are already one of the largest, right? Even after this acquisition, they will still be continue to be very big. But I think the plus point here is that their concentration in Singapore commercial asset is actually now grown to about 94% of the overall portfolio. So for investors who don't like REIT managers going to overseas where you're exposed with the currency risk, now this higher concentration in Singapore will stand out after this acquisition, because this is Singapore asset. Singapore, the rent is in SGD. There's no risk when you convert them into distribution.
So almost as pure play as you can get.
Yes,
close enough.
Yeah. Okay. So of course, now they're going to buy this property 50% from CapitaLand, right? The investment. Yeah. They have to fund it, right? So they're going to use what you mentioned, private placement, where usually this private placement they will give it to like institutional investors, or those high net worth individuals.
They'll sell it to them.
They say, look, now I'm going to sell it to you at 2.04. There's a subscription, there's exercise
per unit, no?
price, that they actually have already closed the deal, at the time of this recording, and they actually been fully taken up. I think by more than 3 overtimes. Okay, so it's quite in good demand. And then now you have another portion where existing unit holders, I think by the time you watch this video, if you already own like units in CICT, I think you will be entitled to this preferential offering, right? So this preferential offering is the same thing where you can buy more CICT shares, right, at a special rate. Now they're actually giving it to you at about 2.007, about $2, okay? And that's actually slightly cheaper than what they give out to institutional investors, right? So unit holders should be happy on that, okay? So I think at that price, if you calculate the yield, I think CICT will come out to be about 5.4%. If you base on that $2. Okay, and that FY 2023 DPU, right? So indicative yield. Yeah, so that is what you're getting. If you're happy with that kind of yield, obviously you can take up that preferential offering, right? But if you're not happy, you choose not to participate, you don't have to do anything, because this deal is alone, even without the tax saving, is already DPU accretive. So a lot of people sometimes they worry that the share price they issue, the price that they're going to issue is actually less than the NAV, which is slightly below that. Is it going to be dilutive? I think it's very mild, but you have to look at other qualitative aspect that this asset is going to come with it, right? So I think it's really up to you at the end of the day. But at the exercise price of $2, I think it's pretty attractive if you already have the intention to have more share in CICT, right? But for those of you who already bought during COVID, or below $2 and you don't want to add anymore, you can just
or you maxed out your allocation in CICT. It's on a portfolio level sometimes as
well. So you can just it seems like a good deal, and then you can just let it be.
Right. I think this is a property that's been on the radar for many unit holders for many years. I think if you go to the AGM, I've been to a few. Sometimes you usually get someone who's going to ask, when are you going to acquire Ion Orchard? Because they have, this is basically probably the mall on Orchard Road, owned by CapitaLand Investment. There's obviously a pipeline to the REIT, and finally this is happening. So would you say overall this is a good acquisition at the price?
Yes.
It's reasonable, right?
I think it's reasonable.
7.1% gross yield, which is comparable to the other malls in the area.
It's even higher as compared to the comparable malls that's nearby, right? Okay, if you're entitled to preferential offering, the ratio is like this, right? So it's every 1,000 existing units, you'll be given 56 preferential offering, right? And that will potentially create that odd share if you were to subscribe. So let's imagine someone, let's say they own 10,000 share in CICT. Now they will be given 560 units to subscribe. Right? And if they take out everything, they have 500 share which they can trade easily as a normal lot. That 60 shares could be odd share.
It's an odd lot,
which is very hard to sell, right? But it's been a while since I subscribed to REITs. So I can't remember whether you can choose that to take that 500 share instead of only, and then you let go that 60 so that you don't have odd share. Or you can just take everything and then you apply for access rights, which you still can apply. They will give it to you on the preference to round out the odd shares. So
you don't know if this is available for this particular exercise? I
can't remember whether I remember that you can actually choose the number of shares you want to take out. So you can, at least you don't have that odd share issue. But correct me if I'm wrong, let me know in the comment, because it's been a while since I subscribed to REITs actually. And I like preferential offering because this is the best way to go about raising fund. And then for those people who don't have money, they don't need to participate, and yet they are not being diluted because it's DPU accretive. I don't like REITs that go for like rights issuance and then heavy discount. So both preferential and private issuance, typically they give a slight discount,
10% or less.
But again, that would depend whether the REIT is trading at like significant discount to the NAV or close to the NAV. Like in the case of CICT, they are trading close to NAV. So I think there's a very mild little dilution over there. So I think not a big issue because it's still DPU accretive.
To give a perspective, like if it's a rights issue, usually like 30 to 50% discount. Depending.
So
that's a lot.
Usually very high. So people who don't have money to subscribe,
you get diluted.
I mean, they can still sell the rights, right, on the open market, but they will still usually be on the losing end. But preferential offering, you cannot sell the rights. Right, it means it's a new paid rights. So you cannot sell basically. Right? You can either take it or you leave it. Someone will take. Take it after that. Right. And important is to take note if you are looking at the preferential offering. I think the starting date where you can actually convert that preferential offering is going to start on 16th September on Monday at 9 a.m. And it's going to close by 24th September at 5:30 p.m. But if you are doing it electronically, you will only close at like 9:30 p.m. On that day. Right. So usually you do it through ATM.
So these are the cutoff dates for you to apply for it.
My advice is wait until the last 23rd or 24th that you subscribe, because you want to look at the share price. If the current share price is like above or below
spread, right?
Let's say the current share price is like 190, you might as well just go and buy the current share price. Open market, right? Of course you incur your brokerage fees, but if you buy through the preferential offering, there's no brokerage fees. But again, it depends on the quantum that you're buying and which one makes more sense. So I usually only exercise closer to the expiry date, but you got to make sure you don't forget if you're intending to take.
Because put an alarm on your phone or something.
Put a reminder or something like that.
Reminder.
So again, monitor the share price, right? Before you purchase, if you look at the share price of the CICT is above that, then it makes sense to take the pref. If it's below that, then don't bother.
Don't bother.
Because you don't know what happened leading to that date. Right. So there may be a crisis around the corner, or if it's another COVID, obviously the acquisition won't be good because there's going to be another drag. There's no tourist arrival, right? So hopefully that won't happen. So those are some of the risks that you need to bear in mind. Because retail REITs usually have that kind of issue when there's a pandemic.
All right. So there's going to be an EGM for this. It's not it's not 100%, but it's most likely. Well, we're still going to go through the EGM vote, right?
It's a done deal.
It's a done deal. There's an EGM.
Okay, you know why? Because they already completed a private placement. They're so confident, and now preferential offering is going to get completed even before the approval. Right. So usually this kind of deal, it's almost a done deal.
Almost a done. I mean, I can't say it's a done deal. But there's an EGM that you're going to go through as well. They're going to vote in a certain way, which is going to be
the EGM is going to be like late October to early November. So
you can attend it if you want, just to listen to it. If you want
you get to hear a lot of people asking questions.
Let's see if you're a unit holder. So I mean, this is I think some of you were asking on, I think through the YouTube comments, and I think over email as well.
A lot of emails, right?
A lot of emails asking about the CICT, this preferential offering and all that, and what you should do about it. So we wanted to do a video, just a quick one, to tell you the basics of the deal. What they're buying and everything, whether it makes sense. And I hope this all explained it to you, and whether you should actually participate in it if you want to. So I think Victor, you own, or someone, your aunt, is it?
My uncle.
Your uncle?
I saw for him,
So what would you do for in that?
I won't be subscribing.
You won't be subscribing?
I think the price was quite similar or lower.
So there's no point.
No time. No. And I don't want to allocate that much.
But if
we
you want to,
do have it also for our dividend portfolio. I think we are not taking up. Because we bought below that. So we're not expanding. And it's well allocated. But if it's not sufficient, then I will consider taking up, because it's a decent price.
These type of questions are really at a portfolio level.
It's a portfolio level.
So I mean, overall the acquisition itself and the price is okay. And then whether you actually want to subscribe to more units is at a portfolio level, whether it makes sense for your portfolio. So you need to decide that for yourself. Everyone is different, so whatever it is. So I think you got to decide. And these are the deadlines that we share with you as well. Is there anything else you want to share about this basically this private placement and preferential share offering?
Shall we go for lunch?
It's good. I think the food court there is actually not too bad. Not too bad. I go there sometimes before the lunch crowd comes. Yeah, but I think we want to share this with you because a lot of questions, and I hope this was really useful. I think that's pretty much it.
Yeah.
Right?
Yep.
Yeah. So any questions that you have, you want to ask that we didn't cover, maybe you want a bit more color, we can always ask them in the comment section. We'll answer them for you as best as we can, of course. And of course, that's it, right?
Yep.
Yeah.
Yeah. Okay. So my name is Adam.
Thank you.
Thank you.
Victor, thanks for joining us today. Hope that answered your question about the CICT acquisition. And of course, subscribe to our roundtable. Many more roundtables coming up. And yes, please hit the like button if you like this roundtable. It's helpful for you. And we'll see you again.